Today, we're diving into the wild story of a stock that just exploded, jumping almost 70% in a single day. So, what's the real story here? Was this the start of an epic comeback or just a giant warning sign? We're going to follow the technical clues and see if we can figure it out. It all kicks off with this one number, a gain of nearly 67% in one day for a company called Envue Medical, ticker symbol FEED. A move this big doesn't just happen. It makes you stop and ask, what on earth is going on? And to really get a feel for this, check out the journey the stock has been on. In just 1 year, it's gone from a low of 99 cents all the way up to a high of over $162. This thing has been an absolute roller coaster, which makes a 67% pop in one day even more fascinating. And that brings us to the big question on everyone's mind. Is this huge surge a sign of a real, sustainable recovery? Or is it a massive red flag telling us to stay away? Let's dig into the technical report and see what the data says.
All right, here's how we're going to break this down. First, we'll look at the rebound itself. Then, we'll map out the current trend. After that, we'll dive into the momentum and follow the money. We'll identify the key price levels to watch. And finally, we'll get to the verdict. Is this a breakout or a burnout?
So, first up, let's set the scene and talk about this violent rebound. And right away, we get our first big clue from the analysis. On January 30th, the stock closed at $3.84. But look at the language the report uses. They don't just call it a gain. They call it a violent recovery. That word choice alone tells you just how intense and powerful this move really was. Okay, now let's start reading the clues to see if the surge is part of a bigger pattern. It's time to map the current trend. So, to figure out what's really going on, analysts use this tool called the Simple Moving Average, or SMA for short. Think of it like this. It smooths out all the chaotic up and down price swings, kind of like drawing a clean line through a messy scribble so you can actually see the real direction the stock is trying to go. And this is where things get really interesting. See, the price just shot above its 50-day average. That's a huge check mark in the good column for the short term. But, and this is a big but, it's still way below its long-term 200-day average. So right away, you've got this battle shaping up. A little bit of good news fighting against a much bigger bearish trend. Okay, now we're going to dig into the why. What was the fuel for this fire? This is all about the momentum and, following the money to uncover the motive. Whoa. I mean, just look at this. The trading volume wasn't just a little higher, it was more than 16 times the average. This wasn't just a few people getting excited, this was an absolute stampede. Next up, we've got something called the Relative Strength Index, the RSI. You can just think of it as a power meter for the stock's momentum. And right now, it's cranked up to nearly 70, which is basically the red line for what's considered overbought. It means the buying has been so intense, the stock might just be gasping for air. But the good news for the bulls keeps on coming. Another key indicator, the MACD, just gave what's called a bullish crossover. All you really need to know is that's often a sign that a brand new upward trend might just be getting started. Okay, now let's really follow the money. The money flow index, which is exactly what it sounds like, hit an insane 94.66. To put that in perspective, anything over 80 is considered pretty extreme. So this wasn't just a ripple of interest. It was a tidal wave of cash slamming into this one stock. But with all this craziness comes a huge warning sign. The report points out, and I'm quoting here, the price has violently pierced the upper Bollinger Band. Basically, the stock stretched so far, so fast, that it's like a rubber band pulled to its absolute breaking point. And you know what happens next, right? It often snaps back hard. So, with that in mind, what happens next? Let's look at the key battlegrounds the report is telling us to watch to anticipate the next move. Okay, the analysis lays out 3 super important price levels. Think of it like a game map. $5.05, that's the next big hurdle it has to clear. $3.62 is the critical ground it needs to hold to keep the positive momentum going. And if things go wrong, $2.42 is the first line of defense. These are the numbers traders are going to be glued to. All right, let's put it all together. It's time for the final verdict from the technical report. Is this thing a real breakout, or is it about to burn out? And it really comes down to this classic fight. On one side, you've got this unbelievable buying volume and that crucial break above the 50-day average. But on the other side, you have pretty much every single warning light flashing overbought. It's a textbook tug of war between pure raw power and, well, financial gravity. So, after weighing everything, the report gives it a final technical score of a pretty strong 75.5. Now, what that tells us is that even with all those risks we just talked about, the sheer force of this recent move gives the bullish case a pretty big edge, for now, at least. So, how do you translate this into a potential strategy? Well, the report suggests a few ways to think about it. If you're more conservative, you might want to wait for the price to drop a bit to see if new buyers show up and prove there's real support there. If you're more aggressive, you're watching that 362 pivot like a hawk. But here's the golden rule no matter what. With a stock this wild, managing your risk isn't just a good idea, it's absolutely essential. And that leaves us with this one last big question. When you see a move this extreme, volume up 16 times, a stock up nearly 70% in a day, are we watching the first page of a brand new chapter? Or did we just witness the spectacular final climax of the old one? As we've seen, the technical clues suggest it could honestly go either way.